Most people work for money, but today I'm going to show you how to make your money work for you. The goal, we're breaking down the exact math to replace a full-time 2025 salary using nothing but dividend stocks. The promise, by the end of this video, you'll know your freedom number and how to hit it and how to get to it. So first off, what is even a dividend? The concept, when you buy dividend stock, you become a part owner of a company. Basically, just like a stock, a normal stock, buying a normal stock. But in these terms, you basically get money back. But when the company profits with the stock that you buy, they send you a portion of that cash as a thank you, basically, and to kind of build loyalty. The reality is a passive income in its purest form. You don't have to show up to a job, you just have to own the shares. So the magic numbers, definitions. So the yield, this is your interest rate. If a stock is worth $100 per share and it pays $5 a year, that is a 5% yield. The DRIP, the dividend reinvestment plan. This is how you turn small portfolio into a massive one by using your dividends to buy more shares automatically. So if you get a drip, it basically gives you that interest. So like we said before, $100, they pay $5 a year. You get $5 a year more into that stock just automatically. So with math and stuff like that, the target is $5,260 a month, but this can vary based on where you live and everything like that. But this is the average of in the United States, basically. So the math in 2025, the average full-time worker brings home about $5,260 a month, and that is $63,120 a year. The objective, our goal today isn't just to make extra money, it's to replace that 63K entirely. And you can choose whether or not you want to work. So basically, if you get dividend stocks and you still work, you're gonna be making double this, basically, making even more money for your retirement and even more money to put into your dividends. But this is just for you not to ever work a job again. So we're gonna be using this example as you don't work and you want to make $63,000 every single year. With that being said, I just came out with a course that you guys can buy. First link in the description below and in the pinned comment. It is $4.99. It's going to get you guys started with the stock market overall. This can be dividends, this could be day trading, this can be swing trading, and even your long term. I recommend getting into this. Start your new year strong and become profitable. Get this course, $4.99, pretty cheap. So we're going to start off with three different paths. So this is going to be path A, the safe route, index funds. The strategy, this is the set it and forget it method, buying the 500 biggest companies in the US like VOO or the SPY. Everybody knows about the SPY, but the catch, the yield is very, very low, around 1.2%. Because the yield is low, you still need a massive $5.2 million to live off dividends. So for many people, I'm not even gonna lie, this isn't really doable. And honestly, this probably ain't the step that you really want to go, but this is the safest method. So if you guys do want to see like how much money should I save up for, if you do have like a higher paying job or you just have a big income and you want to save enough money to get into the safety, I think the SPY is pretty safe. And honestly, the SPY grows around 10 to 15% every single year. So by that time, like let's say if you retire right now, like 30 or something, you'll be getting paid a decent income, and then also your money, your $5 million might turn into like $6 to $7 million later on when you're ready to retire and you still have those dividends. But this is just the safest one. I just want to include this one, but this is not really doable for most people. But $5 million is insane, and this is the safest one. But the second one and third one isn't really too bad, but this is just the safest one. I wanted to include this, but 5 million ain't really touchable for a lot of people. But the verdict for this one, it is great for safety and growth, like I said before, but slow for immediate cash flow in general. But honestly, man, if you guys have a long-term portfolio, I do recommend having some S&P 500 in it. Not your full portfolio, of course, but I know a lot of people that invest heavily into this. So next one is plan B, a little bit better. You only need $1.8 million. This is doable for most people, maybe not most people, but a lot more people. The last one is way lower and a little bit more easier to attain, but it's a little bit more riskier. But this is the sweet spot, and a lot of people invest into these as well. But path B, the income route, the sweet spot. The strategy, now we're looking at dividend ETFs, funds that specifically pick stocks that pay high dividends. So we got Vanguard high dividend, and we also got SGHD. This one's trading at $27 and the Vanguard one is trading at 145, but these are good ones to have. They basically just are ETFs, basically like the SPY, but they're basically designed to buy dividend stocks. And this is one that I do recommend getting into if you guys do want to get into dividend stocks. I do recommend also looking at individual dividend stocks as well, but this is an ETF that moves and buys dividend stocks for you, and you get a bigger yield with this. So the math, with a 3.5% yield, your freedom number drops to from $5 million to $1.8 million. Like I said, the verdict, this is the most realistic path for most people. So most people go to this. It balances safety and solid monthly check overall. And this is probably the safest one. And maybe not the safest one, but the best one to get. So now we're going to go for the aggressive route, path C. And this one, you need less than $1 million. Most people can do this with a lot of saving. Maybe by the age 30, you can have this one, and the yield is at 7%. But path C, the aggressive route, high yield. The strategy, this is for the people who want to retire yesterday. We're talking about REITs, real estate, and BDCs, business development companies. The math, at a 7% yield, you only need $900,000 to replace your job. You can be a dividend retiree with less than $1 million. This one is good, but the warning, higher yield means higher risk overall. If economy dips, these dividends are the first to get cut. So keep that in mind. These are very, very risky, but you guys can pull out anytime. But if you guys don't have a job, you guys might be just living off your $900,000 low key. But this one is unsafe, but this one is another one that you can potentially have some money in. But this is just the riskier play. But if you guys do have $1 million right now and you guys want to retire, go on a little yacht or something, this is the one for you. If you guys want to miss out on any news or any of the plays that I make, and I even do the plays before I even get into them on my X account, go follow me if you guys want. So the summary overall, this is all of them. And honestly, the risk level is pretty high for the last one. But honestly, I do recommend picking the second option, the medium one, $1.8 million only. Not only, but still, this one is still a decent one to look at. The recap, look at the gap here. By changing your strategy, you can lower the amount of money you need by over $4 million. The decision, you have to decide, do you want the ultimate safety of $5 million or the aggressive speed of 900,000? Most people find their home somewhere in the middle. Like I said, man, the 1.8 doesn't really look too bad, and it's safe, and it won't really cut you off too much, and you can live off that for the rest of your life. But the strategy, this isn't for people that have a lot of money. You don't need the $900,000 today. If you start with $100 and reinvest your dividends, your portfolio starts buying its own shares. So keep that in mind. Over time, the snowball takes over. Eventually, the dividends you receive are enough to buy more shares than you are even buying with your own paycheck overall. And honestly, it will add up. I know 30 years seems like too long, but this is just a little example to show you guys, because honestly, man, if you do $100 a month, year 10, 1,200 a month, year 20, you have financial freedom. It's all about, it takes time to get financial freedom. And this is just for people that want to get into the dividend stocks now. Honestly, $100 a month isn't even that bad. And one day you'll look back on it and honestly be happy that you invested all this money into it. The final step is to start today. So don't get overwhelmed by the big numbers that I showed you. Your first goal shouldn't be 5,000 a month. It can even start as low as $10 a month. So open an account, pick one solid dividend payer that we showed you guys, turn on drip, and once you see that first check hit your account, you'll be hooked on it forever. With that all being said, man, I make videos like this all the time telling you guys about the stock market, how to become financially free, and just how to manage your money a little bit better. Thanks for watching. Hit that subscribe button, watch a video, and I'll see you guys in the next one. Peace out.